Welcome to Good Game, your no BS insights for crypto founders. All right, live pack opening, guys, with Top Fantasy. What do you think I'm going to get?
You're going to get me. I think you're going to get me. If you get me, simulation confirmed.
Simulation confirmed. Okay, let's see. All right, see what we get. Oh, I have more packs to open. All right, let's do this.
Music. Wait, who is it? Sex Offender.
Sex Offender. War Daddy Capital. Mikado.
Or that's the founder.
Rip It Fan.
The other founder. Eric Wall. Nice.
Eric Wall.
Mark
Chainshaw.
Zeneca.
Descontis. Nate Alex.
Lawrence.
What a beautiful experience. Oh, look, there you are. All right. That was a fun experience. Like the music, the lights. Looking for your next startup idea in crypto? Check out our request for startups list and get inspired at alliance.xyz/ideas.
Introducing Minimum Viable Product by Alliance. MVP is an IRL hackathon at the Alliance headquarters in Soho, NYC. Go from idea to MVP in 2 weeks. Step 1, register. Apply solo or with a co-founder with a clear product in mind to bring to MVP. Feel free to build anything on any chain. Step 2, compete. 20 teams will be accepted where they'll receive hands-on guidance from the Alliance team and other industry leaders. Step 3, win. Pitch our judges, and the team who comes out on top will win an immediate entry into the next Alliance cohort and take home the title of MVP. Sign up today and prove that you're the real MVP.
So we just announced MVP by Alliance, which also stands for Minimal Viable Product. And the reason why I think this new product that we're launching is quite interesting compared to typical hackathons is that a lot of the hackathons that I've joined are, just people that are excited about trying new things.
And make a little bit of money.
And make a little bit of money, right? From bounties and things like that. Maybe some status, prestige for winning the hackathon.
Yep.
But it's very rare that you see companies that come out of there. And I do think this process is a bit broken, meaning I think a hackathon should always exist. I think they're an incredible place for developers to come in and try out new things. But what if there was a hackathon that kind of pushed the edge or pushed the developers to build something that could change the world? And that's kind of the concept of Minimal Viable Product or MVP by Alliance, which is more of a hackathon that's geared towards people that want to become founders.
Mm-hmm.
By founders for founders. And our tagline is take an idea to MVP in 2 weeks. And the fun part about this, Qiao, is that you and I get to work with the founders hand in hand over a course of 2 weeks in real life to help shape the ideas and help founders or would-be founders to come up with a product that can really enable new use cases in crypto.
Mm-hmm.
What's exciting about this for you?
I just love working with founders in person. It's just a really magical experience.
Yeah.
As opposed to chatting on Telegram and then doing Zoom, the in-person experience just cannot be replaced.
So the program starts May 20th till May 31st, and you get to work with us within the Alliance office. We are only picking 20 to 25 teams or individuals, and the goal is to get to product market fit within those 2 weeks. And so for those that are excited about this, feel free to hit up mvp.alliance.xyz. And we'll see you there. Welcome to Good Game. Today, we're going to be talking about if it's over or not in the market. I signed on to Twitter today and it was death. I signed on to Twitter yesterday, it was death. I signed on to Twitter a week ago was death. And the way the market makes it, at least what the timeline makes it seem like it's over. What do you think, Qiao?
I've never seen a cycle end with this much FUD on the timeline. Have you seen any?
No, I actually haven't. So I'm just curious as to why the market, or at least Twitter, thinks that it's over. And I think it's maybe partly due to over-indexing on the ETF inflows, partly. As soon as it turned zero, the market went to zero. Like you could just tell, like there was no excitement for crypto whatsoever.
Yeah, I thought the correction that we're seeing right now, I mean, on Bitcoin right now, we corrected 25%, and that's a very typical of the bull market correction, right?
Yeah, it just hit 57,000.
Okay,
probably. I think it go to 50.
So what happened was Bitcoin just overshot. We went straight from like 30K all the way to 73, right? And it was just overextended, and so now we're just correcting. Clearly lost the momentum when the ETF inflow stopped, and now we're just correcting.
Well, there's a lot of talks about why it's over. One is as I mentioned, ETF inflows. Two is no new narratives that are coming there that are emerging yet. All the narratives that we've seen have already played out. So if you think about Solana becoming the retail chain, it is now kind of taken that narrative and it's fully formed now. Base, I don't see anything new coming out of Base. Ordinals played out. Runes played out. Everyone thought that, including myself, thought Runes was going to be a spectacular bang. And I think that I know why some of those issues led to where it led to. And we can talk through that. But what else? Like, what else do we have going on? Maybe
all these things that quote unquote played out were a result of the Bitcoin consolidating or correcting.
Okay.
If Bitcoin stays at around 70K and consolidating, then all these narratives should be doing fine. Okay.
So I guess maybe looking forward, how do we think the market is going to play out in your mind?
I have no idea. What do you think? My base case is we're going to consolidate for a couple months. Like so far, we've not seen a 30% correction yet. So even today, at 57, at 56, the correction from the top was like 25%. But typically in a bull market, we should see a 30%, even 40% correction. So this is entirely normal. And so I would not be surprised that we just hang out between 50 and 70 for the upcoming months.
Yeah.
And I don't see any strong reason why the cycle is over. In the grand scheme of things, the cycle is always driven by liquidity, by global liquidity. So for example, if you chart Bitcoin with the stock market, S&P 500, it's virtually the same chart. If you chart Bitcoin, if you chart Bitcoin with the semiconductor ETF, which has been the leader of the stock market so far, it's basically the same chart. And all these different markets are actually both driven by the same underlying factor, which is the global liquidity. And as long as the economy is doing fine and the Fed is not hiking rates or doing a ton of quantitative tightening, the liquidity should expand from here. And as a result, all the risk assets should do okay. And I'm talking about a time horizon of a few months to maybe 12, 18 months.
We do have the upcoming election.
Yeah. So that's the other factor. Like the left will not let the market crash.
Exactly. So I do think we'll get a curveball here in the next couple months. I feel that this is typical after maybe being in the market for a while now. Typically after tax day, markets either chop or go down over till summer. And then around summertime.
The tax thing is actually another good factor.
Yeah.
Because last year we've been up only, and people probably made a lot of money, and they needed to take some money off the table to pay taxes.
Yeah.
Which is why, in hindsight, the market actually topped around the tax day. It's a good point.
So I think between that and I don't know if how much of the institutions really take summers off in crypto.
Yeah.
I think between those two, the macro and the overextension, as you mentioned, I think all kind of played a part. All right. Well, looking forward, there's some really interesting narratives that are coming around that I'm actually really excited about. One of which, well, actually, let's talk about this. This is still pertaining to the markets, which is you sent a tweet out to a bunch of our cohorts that are building the RWA space around BlackRock's on-chain fund, which hit 375 million. I'm curious why you shared it. Also, like, where do you see this going moving forward?
I mean, I shared it with him because essentially, I think there are two things that happened in the last month in the whole RWA and stablecoin sector. One is the BlackRock fund, $100 million. They started with $100 million, and now they grew very quickly to 375 within a month or so. This basically instantly legitimized the whole RWA space. Like before, it was not, like people talk about RWA before, it was not consensus, especially the crypto purists, right? The crypto natives that are very purists. They didn't think RWAs were very interesting because it was not intellectually satisfying for them to put traditional assets on chain. But BlackRock basically legitimized the whole space. So that's one thing that I thought was very interesting. The other thing that happened was Stripe that started adopting stablecoin payment.
That's a big deal. I think the last time they had this was in 2018. Did you watch the video?
The demo?
The demo. He said a couple interesting, like just a couple things that I think could be interesting for our audience. He insinuated that they did try this in 2018. It didn't work because it's too expensive. And he kept calling out how cheap the gas fees were and how quick it took to conduct the transaction. So he called out two things: speed, cost. And the demo was done on Solana.
I thought that was the most interesting part. Like they supported Ethereum, Polygon, and Solana. And out of the three, he chose Solana to do the demo on.
And so we're starting to see like what I call kind of like lightning in the bottom moments where I do think this is going to become more common moving forward. And this is driven by what people want ultimately, which is speed and cost reduction.
So they knew in 2018 that this thing was going to work at some point, but the tech was just not ready. But today they feel the tech is ready.
The tech, the narrative, even especially after, if you look at what Solana has gone through over a period of, over a period of time, all the congestions and things like that, they remain resilient after that.
In hindsight, the fact that Stripe adopted stablecoin is not surprising to me at all, because we see a ton of people in emerging markets in Africa and Latin America use Tron USDT for day-to-day payment, for cross-border payment, and for hedging as well. To me, the natural next step was for a quote-unquote big startup like Stripe to adopt this technology. So it's good. It's really good for the space because people have questioned what is the first non-speculative use case of crypto, right? Like people have questioned this for like 15 years. And now we have one, which is using USDC and USDT for payment. So it's great. I think the Stripe one not only legitimized stablecoin specifically, but also the whole space, right? The non-speculative, quote unquote, real world use case of crypto. It was a big deal.
Yeah, I don't know what the market's crying about. I mean, you have BlackRock, one of the largest asset managers in the world, that is, doubling down on on-chain RWAs with this tokenized fund. The other news is that they're hosting like Bitcoin investor events for.
But here's what's interesting about the public discourse around crypto, which is people don't care about the non-speculative stuff. Like the speculative stuff is what leads to the discourse, to the conversations, the debates, and the arguments. Like people are naturally driven by highly volatile assets and markets. And whenever like a stablecoin is not interesting to talk about because the price doesn't move.
Well, there's no token attached to it.
There's a token, but it doesn't move, right? And RWAs is the same thing. Like it's a real use case, but you earn 5% per year from US T-bills. No one talks about it. But it doesn't mean it's not important. Like there's billions of dollars in T-bills on chain today, and there's trillions of dollars being transferred on chain on stablecoins. But people don't talk about that stuff because it's not volatile.
I do think RWAs and all the stuff that we're seeing with BlackRock, eventually people are like, one, I think it's just going to grow tremendously. Like there isn't enough intention to this because people don't realize how big this opportunity is. Everyone's thinking about ETF inflows. I think that's also a big deal. Don't get me wrong, but tokenizing treasuries, tokenizing securities, tokenizing real estate is actually a very big deal. And once we all realize how big the global demand for it is, we're going to start to see that shoot up like a hockey stick. And and I think people will get more bullish.
I actually drew an analogy between Bitcoin ETF and RWAs.
Oh, you did? Okay, go ahead.
So both are actually used for the main value proposition of both the ETF and RWAs is diversification. The difference is the Bitcoin ETF is used for diversification by TradFi, whereas RWAs are used for diversification by on-chain capital. So basically, the Bitcoin ETF is to TradFi what RWAs is to on-chain capital. It's the exact same purpose, just for different user segments.
So, all right, let's play some numbers here. I remember before DeFi Summer, we were sitting maybe around 250 million, maybe 500 million. I don't remember quite frankly, but let's say 500 million total TVL. DeFi Summer happened, yield farming happened, and we like went over billions within like 6 months.
Yeah.
Could you say that we're almost where we are with DeFi Summer with RWAs?
I was actually thinking about this earlier today. I feel like that is exactly where we are, because the whole meme coin thing actually reminds me of DeFi Summer. So like right now, I feel like we're reaching the end of the DeFi Summer, and the speculative bubble sort of collapsed a little bit, and then Bitcoin went down about. I think Bitcoin at that time went down from 14,000 to 12,000.
Mm-hmm.
So it was a small correction. And today, Bitcoin also experienced a small correction. In my mind, it's pretty small, like from 73 to 56. That's a pretty small correction. Same order of magnitude as the one that happened during at the end of DeFi Summer. There's a lot of similarities. So I kind of agree with you. And also in terms of timeline, it's like if you think of, like, I don't necessarily buy the 4-year cycle anymore, but if you still believe in the 4-year cycle, then we're around the same timeline as well. Right? Like we're year 3 into the bull market, or into
we're
the
about halfway, right? I mean,
yeah.
All right, so let's talk about this. To me, it's consensus now that, and look, I don't know. Everyone on Twitter is saying we're halfway through the market. Everyone is saying that, like, it's consensus to the point where it's annoying. It's annoying me.
Mm-hmm.
It wasn't like this last cycle. No one knew what the fuck was going on last cycle, if you ask me. And the cycle before that, I mean, it was just pure euphoria.
Yeah.
Do you, like, obviously you don't subscribe to the thesis that, like every cycle could become a different cycle moving forward?
No, I subscribe to that thesis.
Oh, you do subscribe to that. So you do think that historically we'll still be in a 4-year, like every 4 years?
No, I think the 4-year thing is a coincidence.
It's okay.
Yeah.
But is that going to be a coincidence moving forward is the question.
Well, again, like the current cycle could very well end at the 4-year mark, but if it does, it's a coincidence. From this point on, again, like I mentioned before, it's driven by global liquidity.
Global liquidity, yeah.
And it just so happens that global liquidity cycles last around 4 years, like every time.
Yeah.
So I don't buy the 4-year cycles, and I don't buy the what is it called, the left translated cycle, the shorter cycle.
Well, okay, let me add more context. Okay, so crypto is becoming mainstream. Right? Is it fair to say that crypto could become less volatile than previous cycles?
Of course, with more liquidity, more institutional adoption, sure. On average, the volatility trends down.
Okay, so I guess with vol trending down, will the cycles be as dramatic as they were before? Is the question.
Less dramatic.
Okay.
I mean, possibly 4 year, but if it ends up with if it ends at the 4-year mark, then again, it's probably a coincidence.
All right. What assets are you most excited about
in crypto?
Let's say that we trend down for a bit.
Yeah. What would you buy?
What would you
buy at the bottom if you're able to pick the bottom?
What would you buy? Look, ETH has been historically, like, over the past 6 months, ETH has burned me every time.
there were so many funny tweets around ETH.
Oh my God. Like, I read so many funny tweets about it.
There's so much fun. Let me read it out. I love Ethereum so much. I made a 2 in the toilet this morning.
Oh my God.
But anyway, I'm not here to FUD ETH. But
I
do think so the ETH ETF will be very important. In fact, the ETH ETF is probably the biggest catalyst I can think of. I know a lot of people were saying like EigenLayer. Oh, we're going to talk about EigenLayer as well, but a lot of people were saying EigenLayer was the biggest catalyst, or 4844 was the biggest catalyst. Obviously, I love the technology, I love the innovation, but when it comes to price impact, the ETH ETF is probably the biggest catalyst for ETH. And I think if the ETF does not get approved, I think ETH will continue to underperform BTC and Sol.
Oh wait, you're saying ETH is going to outperform?
No. If ETH gets the ETF, it could outperform.
Oh yeah,
BTC and Sol. But if it doesn't get the ETF, it'll probably underperform, because the problem with ETH is, and someone pointed this out, it's overowned by crypto natives. That's why it's so hard to go up, because there's no net marginal buyers. The only thing that people can do among the crypto natives is to diversify from ETH to Sol, and not the other way around, because ETH is overowned and Sol is underowned. At the same time, BTC actually gets marginal inflow from the ETF. So that's the fundamental problem about ETH. It's overowned by crypto natives and doesn't have marginal inflow from TradFi. So yeah, we'll see. But I still think my base case is still that this is BTC and Solana cycle.
Okay. So is the barbell approach, because this is also becoming very common on Twitter.
But it's not BTC Sol is a short barbell.
Yeah.
The long barbell is BTC and WIF.
BTC. Well,
I'm actually really surprised. WIF didn't go down as much as BTC did in the last couple of weeks.
WIF
is actually holding up a lot better than BTC. That's really impressive. Not financial advice.
Not financial advice.
Don't YOLO every time. Don't YOLO.
Yeah. I mean, there's some really good narratives that are picking up for some of these meme coins. Maybe we can transition to memes. Although I do feel like memes have been overplayed. I kind of put a tweet out that said, "I'm done with shitcoins."
I'm done too. I don't think
I'm done with, like, it's fun to talk about, but need a little bit of a break, I feel like.
There was a chart of the number of meme coins that are created on Pump. Let me find it. Okay, so Pump kind of launched, or Pump took off in mid-March. So now it's been about a month and a half. Do you have a guess for how many tokens have been deployed on Pump? What's your best estimate in the last 1.5 months?
Okay, so about 6,000 tokens per month on average.
Per month? You're off by 2 orders of magnitude.
Wait, what? How many?
Close to 400K.
400,000? Are you serious?
Yeah. It's on Dune Analytics.
Wow.
Okay, so 400,000.
I got the numbers from somebody from...
Okay, so close to 10,000 tokens launched per day.
Oh, shit. Okay. I was expecting... Maybe I'm definitely off, yeah.
Maybe the data is wrong. I don't know, but it's on Dune. And...
no, that's insane if that's true.
But my point being, back to our earlier point, there's so many tokens that are being deployed on chain, and the attention is fragmented across 400,000 coins or 10,000 coins per day that's being generated, and so it's very hard for these coins to go up when there's so much competition for attention.
I mean, like, look, I got burned by many coins. I can tell you from experience.
Oh, we should talk about the the most interesting thing that happened in the meme coin space is the whistleblower. All
right, let's talk about it. So there was a you may have seen this tweet thread where there's a pedo and he was doing weird things, and it was shot on, like, I think it was a news channel, and in the background he was there doing something weird. And everyone was trying to figure out, including the authorities were trying to figure out who this person was and how do we find them. And this crypto degen, who we think are the pioneers of the space, ended up doing some research, found out who it was. His name was like Stefano Vici or something.
Is he Aina? Is that his pseudonym?
No. This is the pedo's name.
Oh, okay.
The degen's name was something with starting with love, L-U,
that's
or
right.
Louvre. And he put a tweet out and he said something to this nature, which is, I did some research, found out who this person was, and I don't have a very strong following. I only have like 1,000 followers. And so I figured the best way to get attention around this is by launching a token with his name on it to dox the person. And if this goes viral, then I've contributed to helping the authorities find this individual.
Yep.
And it did in fact go viral. And it got to a point where the person that initially called out this person a couple weeks ago, someone that's not in crypto, he tagged the crypto degen and thanking him about calling this person out.
Do you know what market cap it went to?
I followed it. I think it went up to $1 million.
Oh my God.
I think it died after that. So this is obviously not buying advice or financial advice, but the ticker's TV pedo. Yeah, it's a set.
So basically, he used a meme coin to get this thing to whistleblow this guy and to help spread the message and get the attention, because for him, creating the meme coin actually helped the thing go viral more than tweeting out from his own account, because he doesn't have that many followers.
That's right.
And that was the most interesting thing I've seen in the last 2 weeks in the meme coin space. Like, I don't understand why people dismiss meme coins so early. Like, I'm not saying it's necessarily good or bad. For me, it's not moral or immoral. It's just amoral. But every time you see a new thing that becomes so controversial right off the bat in crypto, it's dangerous, very dangerous to dismiss it too quickly.
I mean, if you think about it, this cycle has happened many times. When Bitcoin first came out and everyone was memeing that it's going to be the next gold, everyone dismissed it, right?
No.
Same thing with Ethereum. Same thing with,
DeFi.
all the DeFi.
Same thing with NFTs.
Same thing with NFTs. Same thing with Cardano.
Well, Cardano is kind of a bad example, but
it's a joke. I wanted to see if you caught it.
But with me,
there are some legitimate people that believe Cardano is still the future.
That's true. Yeah. Actually, I was talking to a friend of mine who's a crypto native, very smart, and he has normie friends, also very smart, well educated, who thinks Cardano is the real deal. So Cardano actually has a lot of real believers. But anyway,
believe me, I know. I talk to retail all the time, and I think it has to do with Charles being the ex co-founder of Ethereum.
Yeah. Charles is the reason why Cardano is at $10 billion FDV.
Yeah.
He's the cult leader.
Yeah.
Anyway, going back to the meme coin discussion.
Yeah.
All these new things that we met, like Bitcoin, Ethereum, DeFi, NFTs, people dismiss them right off the bat, and meme coins get dismissed because they're silly. But there's always these new emergent behaviors that come out of these new experiments, like this whistleblower guy using meme coins to spread the message. That is fascinating. And I think we might see even more interesting behaviors coming out of the meme coin space.
Yeah. And I think this should be launched by then. But another team that we're working with is called Crate. And, the way, let's talk about music, crypto music as an example, generally. Crypto music, I always felt like it was skeuomorphic. We're so used
to NFTs were skeuomorphic.
Yeah. Oh, NFTs are skeuomorphic? In what sense?
Like the music NFTs were skeuomorphic.
Yes.
Like the one song equals one NFT, that never
like an MP3 file, right? Or an iTunes file. Yeah, it reminded me a lot of that, right?
Yeah.
Or catalog, which is, on-chain streaming, right?
Yeah.
You have Vault, where you buy digital copies with USDC of the album in and itself. These are all like behaviors that we're already accustomed to in the real world.
Mm-hmm.
But the real question is, what can crypto enable that hasn't enabled music today? That is like the way you'd want to think about it. The way I've thought about it is as follows. Well, for musicians, they have to compete to get on the right algorithm, right? To get the right network effects with the distribution that Spotify and YouTube has. You need to have the right influencers. You need to have the right people that are talking about it. And you have to work really hard to get there. But it's much easier than what it was previously, right? If you look in the Web 1 world, you have to have mixtapes or tapes. You release the mixtapes. You start to build local buzz. Maybe then the radio station locally takes your song. Then maybe other radio stations take your song. And that's kind of the way things used to go viral before.
Imran, you're that old?
I'm a boomer, yo. But yeah, that's how things went viral back in the day.
Mm-hmm.
Now it's streaming network. So an example of this is, Justin Bieber. How did he get recruited. He was recording live on YouTube, right? And Usher saw it, picked it up, and introduced him to P. Diddy.
Is that how he started?
Yeah.
Started as a YouTube influencer?
Yeah. So YouTube launched around 2004, 2005, something like that. Or maybe 2006. He was discovered 2008. I think it was 2006, so 2008 he got discovered, 2 years later. And so the question then is, and the way he got discovered was because of reach. Everyone liked the song, and that's became the new meta for the next 2 decades or decade and a half, right? That became the meta. Like you go on YouTube, you go on SoundCloud, you drop your stuff, you share it, and hopefully it goes viral. You know, maybe the right algorithm, or the right, you know, you just hit it right. But now it's becoming, I think, overpopulated, right? There's just, everyone is just trying to become the next musician.
Yeah, and hack the algo. And
hack the algo to get there. So the question is, how can crypto compete against the algo? How can crypto compete against the distribution or the network effects that YouTube and Spotify has? And I think we have an answer to it now. Huh?
Through the free market.
Through the free market.
Of meme coins.
Exactly. It's probably very contrarian still today.
Oh, it makes a lot of sense to me. Like this is the same story as the pedo whistleblower. Like you use coins to spread the message, to go viral, to help something to go viral.
That's right. So what I think is going to happen is every medium is going to be tokenized. And it's going to create a completely new experience for both sides of the marketplace.
Yeah.
Those that want to deliver value to customers, and customers that want to receive value in return. But it's going to be done in a very different way. So here's like an example. Today, we are being mined for data. So because we're being mined for data, we get free products, right? Number 2 is we also pay, if we want additional services or whatever, there's also a SaaS model, right? That typically comes with these products that we receive. And the question is like, okay, how do you compete with that via crypto? Well, you can't compete with free. You just can't. But we could give them the opportunity to make upside. And that will compete with any business model that's out there moving forward. So in return, I think what's going to happen is instead of people being mined for data or subscribing for services, everyone's just going to become capitalist. And maybe this is too polarizing, and maybe there's somewhere it's happy medium somewhere. I'm not saying this is all going to be like that.
It's going to be very polarizing, but I can see it work, and people will not be happy, at least in the first few years. Like people were not happy with Facebook. People were not happy with Tinder. But now these things become widespread, mainstream consensus. So people just live with it. People accept it.
Welcome to Founder Stories. Today we have Joey on from Crate. Joey, can you talk a bit about who you are and what you're building?
Yeah, I'm Joey, building Crate, which is the song crowdfunding platform, a place where artists can launch their songs on chain with a token as a means to bootstrap funding, and their community can show their patronage with a token that shows they were there first.
Nice. How does Crate's tokenization of music differ from previous NFT music narratives that fell flat?
I think music NFTs were on the right track. They had the right idea. I think they didn't work because they have no liquidity and no secondary market. So, you buy an NFT for $1,000, $2,000, and you're never going to sell it. So I think they're just inaccessible to most people. I think they were trying too hard to be skeuomorphic to physical collectibles when we need something new. So I read a Santiago tweet right before this. It says tokens are more accessible and fun versions of NFTs. And I think it's exceptionally true for music. There's no sticker shock, no unit bias. And most importantly, you can buy and sell instantly, like locking in your gains or losses.
What does Crate offer artists and fans that current streaming services don't?
Current streaming platforms are like gatekeepers between fans and artists. They control the economics. You pay your $15 a month, and most of that money goes to Taylor Swift and Drake, regardless of if you actually listen to them or not, because they pay out in their pie chart system. So that means if there's a new upcoming artist and you're their biggest fan and you listen to them every single day, they could be not even getting 1 cent a month out of the $15 you pay, even if they're the only artist you listen to. So obviously it's completely broken. So with Crate, we're bringing the relationship between fan and artist closer than before. You can directly choose how much money you want to put. whether you want to listen to it for free and just not spend any money, you can do that. Or you can put thousands of dollars into your favorite artist songs. There's basically no middleman controlling that relationship.
Great. Joey, thank you so much for your time.
Of course.
Why can't anyone else become the next Justin Bieber or Usher is the question, right?
Yeah.
Like you and I, we hear good music all the time. Why can't we just buy a token and support them?
Yeah. And it's okay if I lose a little bit, like if I put in like $10 or something. I don't care if
$1. Like put $1 in. Like you don't even need to put. So like here's the other thing, right? I think look, as much as we're advocating for meme coins, etc., people could lose money here, right? Yeah. So that
I also think that the terminology, the meme coin is we should change it.
Yeah,
like
I think
the terminology is what leads people to look down on it. Like it has a silly connotation, a negative connotation with it. I think we should call it intersubjective token or something.
What the fuck was that all about? Like,
I study Yuval Harari.
Yuval Harari. Yeah.
I actually learned that word from Sapiens.
Sapiens? Okay.
Yeah. Did you read the book?
I read half of it. I didn't read the whole thing.
Okay.
But I read enough to get an understanding of what he was talking about.
The intersubjectivity part was actually the most important thing I got out of that book. And what the word means is basically memes, right? It's a shared story. It's a story that a group of people can resonate with.
Yeah.
So it could be a religion, it could be a funny internet meme, it could be a song, right? All these things are quote unquote intersubjective.
Humans love storytelling. People love to be told stories. People,
not only that, people love connecting with each other over a story. That's the most important thing.
Yeah.
So people love connecting with each other over a funny dog with a hat on the internet, and people love connecting with each other over a religion, or over nationality, ethnicity, or over a song. Right? That's the case of music meme coins.
So I guess going back to like shit coins, meme coins, whatever you want to call it, attention tokens, intersubjective tokens.
Yeah. IST
is that each token will create a narrative that can connect people together, and the reward is the financial upside. I mean, I think that's pretty simple, right?
I think it could work. I really think it could work. Like basically Pump.Fund, but more specialized.
Yeah.
Like specialized version of Pump.Fund across different verticals. So like music, videos, Farcaster channels, subreddits. I can see.
By the way, all the verticals that Qiao is mentioning, we have founders already building in that space that are part of our next batch.
I'm very excited. I don't know if all of them will work, but I'm very excited to see the experiment play out.
Yeah. It's almost as if, I don't know, maybe I just feel like sometimes we're in the future. I don't know. If this thing really was to take off, I mean, the entire world could be reimagined, look very differently.
Yeah. And it's going to be very polarizing in the beginning.
It's going to be very polarizing. I was listening to this. Okay, so I'm pretty old now, right? But when Xerox, before it first came out, this was 2016, 2017.
Yeah.
And one of the and what really got him into crypto, like deeper into crypto and like shitcoining, was the vision 0x had back then. And back then, if you know Xerox, it's or Matcha is an aggregator. Xerox is a liquidity protocol that bridges between different AMMs, and it's supposed to unify the liquidity experience so that Matcha and other users can tap into it and create rich experiences for their end users. He said something to the order of, I believe, and this was when shitcoining wasn't even a thing. He said, I believe everything's going to be tokenized.
Yeah.
The whole world.
I remember this. Who said that? Was it Amir?
Will.
Oh, Will. Okay.
He said everything is going to be tokenized. There's going to be an AMM for every vertical that's out there.
I remember Olaf.
Do you remember this?
I remember Olaf said the same thing in 2017. And I didn't buy it. I didn't buy the story. But in hindsight, he was right. Everything's going to be tokenized.
Everything's going to be tokenized.
Like TradFi assets in the form of RWAs, music, videos, subreddits, Farcaster channels. Everything will be tokenized.
So kudos to Olaf and Will from Xerox that called it out. And so if that vision was realized today with, like the liquidity layer with all the AMMs and all of the liquidity being bridged to 0x protocol, I think could be very successful, right?
Yeah.
Like, I think that is going to become a big problem today. But now we have Solana. just joking. I'm joking.
Oh, by the way, Solana congestion has gone away.
Yes.
You see that?
I did see that. The update happened and all the copers left.
Well, so it seems to me, I don't know this. I didn't pull this from myself, but I learned this from a few people who are knowledgeable. The patch probably helped, but it was mainly because the ore mining thing stopped.
Yeah.
The quote unquote proof of work DDoS attack.
Yes.
So the moment that thing went away, Solana was the congestion was done.
Yeah, I saw that. And Firedance is supposed to come out too soon, right?
Oh,
I saw.
Well,
I just saw a tweet about that.
Yeah, what was the original quote?
Final integration of the Solana Jump Firedancer client is well underway.
Yeah, but that's pre-testnet. So I think the next step is testnet.
Yeah,
and then mainnet. So probably still
6 months out.
Yeah, something like that.
But I'm really excited about it. Between all the layer 2s that are coming out on Ethereum. Oh, maybe we could talk about Monad and Berachain and Ton, because those are the three I think that people are talking about as the next big narrative.
Mm-hmm.
You've spent a lot of time within Monad, so maybe we can touch on Monad.
Yeah, I don't know if it'll work. I mean, the tech. I think the tech will work. The technology is super interesting. I think the core problem it solves is that the EVM sucks. So they rewrite the EVM from scratch to make EVM faster, more scalable.
But it's EVM compatible, right? So anyone can transfer. Yeah. So
if you have smart contracts on Ethereum, ideally, or at least theoretically, you should be able to deploy the same thing on Monad. The problem is the biggest difference between Monad and some of the recent high throughput Ethereum layer 2s is that with a layer 2, you can basically deploy or migrate your ETH directly to the layer 2. Whereas Monad, you don't have native ETH on Monad. So that's the biggest challenge for Monad as a layer 1, because you don't have the ETH liquidity.
So by not having ETH liquidity, yeah, I mean, like that's has always been the problem, though, right? For
that has always been the problem.
But I mean, like that can be solved easily by like farming, right? Could it not?
But you're still not gonna have like $500 billion worth of how much is ETH worth now?
Let me check.
Yeah, $300 billion worth of ETH ready to go. If you launch Monad or any layer 1, your native asset will be worth maybe at most like 20 billion, I would say. Because Sol right now is 50 billion, 55 billion.
Huh?
So you're just not going to have as much liquidity as you would as layer 2 on Ethereum. Because on Ethereum, you can have native ETH and there's $300 billion worth. So that's the biggest challenge.
But I feel like it's not
they need to solve this. They need to solve this problem. If they solve this problem, the liquid problem, then I think it'll probably work.
Huh.
But there's some newer layer 2s. Have you heard of MegaETH?
I have not. Oh, I saw it on Twitter. Sorry.
Yeah, I saw it on Twitter.
Yeah.
And I was talking to the founders, one of the founders, and she was telling me that MegaETH should be faster than Monad.
How is that possible?
I don't know what the underlying mechanism is, but I mean,
as a layer
2, yeah.
Huh. Okay, so you don't know how the infrastructure or the infra works, right?
I don't know how it works.
Yeah. Okay.
She wasn't actually able to explain to me.
Yeah.
She's not the technical co-founder.
Got it.
If what she says is true, Monad is going to face a lot of competition from the layer 2s, because launching a layer 2
is easier.
Is easier, and it gets more and more commoditized.
So here's another thought I have. From a fee perspective, if the average transaction is $100 on Ethereum,
layer 1,
mainnet, and now you have so if Ethereum mainnet is $100 per transaction, let's say, or maybe even $50, because I will get a lot of DMs about this. So let's just say $50. Well, right now it's only $5.
The average is lower. The average is lower, actually. The average is probably $10, $20.
Okay,
but today, on a day like today, it's probably a lot higher because the market is crashing.
let's say $25. Okay.
Yeah.
What would, in theory, the fee would be on layer 2?
Well, on base right now, it's like 2 cents, 3 cents.
2 cents. Okay.
Yeah.
On Solana?
Same thing.
Okay. The way I see this is going from $10, $20 a transaction to 2 cents is a dramatic user behavior change, right?
Yeah.
Now, going from 2 cents to a fraction of a penny, I don't know if it makes it doesn't make a dramatic impact as it does from $10 to 2 cents.
You sound just like ETH Maxi right now, because I know a lot of ETH Maxis say the same thing, but I fundamentally disagree with that. I think every order of magnitude improvement in fees will enable new use cases.
Okay, that I agree with.
So for you as an individual user, it may not make too much difference.
So I agree with
let's say for someone who can barely afford a smartphone.
I don't know. I'll push back on that by saying, okay, I agree. Maybe there's some new use cases, right? Like
the biggest new use case, I think, is two things. One is people living in developing countries, and two, the bots. And bots have a bad rap, but the fact of the matter is, like, without bots, order books, central limit order books won't work without bots. So algorithmic trading is one of the things that much lower fees can enable, because you're going to do a lot of order book updates. And AI is another one. If you want to do inference or whatever on chain with AI, also, by the way, is technically a bot, right? Much cheaper fees will enable those use cases. So whenever ETH Maxi say ETH is the AI money, I mean, like, it's bullshit. You cannot pay $100 per transaction. Like, I think even Solana is not good enough today for AI. You have to bring the cost down by at least one or more orders of magnitude.
So what is the right fee structure? And the reason why I brought up this thesis or thought is I've given you some emergent behavior, what the Tensor team went through, which is between CNFTs, the launch of CNFTs, and the low fees within Solana, a lot of the emerging countries are actually buying CNFTs, as an example.
Mm-hmm.
So Thailand,
because it's cheaper.
It's much cheaper. So I subscribe to the thesis that I think 2 cents is good enough to onboard the masses versus Ethereum mainnet. You know, you're also seeing this with Solana or Stripe using Solana, right, as stablecoin transactions, as an example. I think it's good enough to onboard the masses.
Mm-hmm.
I think what you're talking about is even a step further, which is, you know, AI, algo trading, and things that are much more advanced, which I also agree with. And so I would probably bucket this as two different use cases. Yeah. So for, I think, the everyday person, like even my brother who, you know, whoever, right? Like, I think for them, like, Solana is good enough. Base or Blast or other layer 2s are good enough for them to trade shitcoins. But for advanced use cases, I 100% agree with what you're saying. So there is a world, I guess there is a world where every like Monad can exist and all these other places or other layer 2s can exist, right? Is what you're making an argument for.
I want to share a book that I read recently, which I shared with you, actually.
Yep.
It's called The Chip War. That book has nothing to do with crypto. It's a book on semiconductors.
Go ahead.
And basically, it's a history book on what happened in the last 70 years. So basically, since the Second World War up until today. And the key lesson that we learned over the last 70, 80 years was Moore's Law and the profound impact of Moore's Law. So basically, every, let's say, call it 10 years or so, we get one order of magnitude improvement in the speed of semiconductors, given the same size and same cost, right? Another way to think about it is those chips get cheaper by an order of magnitude every year, given the same speed and size. And so what happened was during the Second World War and the Cold War, chips were first used for military, for weapons. As the chips got cheaper and cheaper, one decade later, in the 1970s, people realized, oh, we can use chips for computers to be used for commercial use cases by companies, basically. And then the next decade, we realized, oh, chips now are cheap enough to produce personal computers. So that was the rise of Apple and Microsoft. That was 1980s. And then 1990s, people realized, oh, we can now use chips for internet. So that was the dot-com bubble, right? And then the decade later, it was 2010s. people realize, oh, we can actually now produce smartphones, because now the chips are as fast as it was a decade ago, but much smaller. So now we can produce equally performant but smaller devices. So that was smartphones. And the decade later, it was AI, and that's now. So the compute is now powerful enough to run a very high throughput AI. And then the next decade, it could be quantum computing, right? So as chips get more and more performant every year and every decade, we enable new use cases. So this was the most important lesson from that book. And I think the same thing will happen actually with crypto. So remember, going back to the Stripe example, in 2017, Stripe knew that stablecoins were going to be big, but it was not fast and cheap enough to support it for mass adoption. But now it is. Now imagine that with Solana or the layer 2s becoming cheaper and cheaper in the next decade, there will be new use cases. And it's actually very hard for us to foresee, to predict what those use cases will be in the next decade. But there will be new use cases. I'm very confident of that.
That makes me excited. It's as much as like you're in the crypto bubble today, and all you see is all people tweet about is casinos and shitcoining and all of that. Being able to see new use cases like AI and others actually keeps me really excited about the future of crypto. I mean, look, I think meme coin trading, all this stuff is fun, but typically new thing.
I love trading meme coins.
But all of this is usually a precursor to what is really to come, right? Things often look like toys before they actually become full-fledged products.
Do you want to quickly touch on EigenLayer?
I do. I also want to open up this pack. So I have to bridge base. I have to bridge blast. So let me do this while we talk, okay? Oh, how much I love bridging. Let's talk about. I really want to talk about Ton.
Yep.
I think there's just so.
Okay, let's talk about Ton.
There's so many exciting use cases, and I'll talk about a few that I'm most excited about. But you've been diving deeper into space. I know when we last chatted in our last pod, you talked about some of the fee. One, onboarding is hard because they're not allowed to.
US phones are geofenced.
They're geofenced. Everyone else able to. The fees are a little bit expensive. I had a chance to play around with it. So let's talk about. Maybe let's dive deeper into the Ton thesis. Some of the things that we're seeing. They just made an announcement with Tether. So I think there's $200 to $300 million now bridged to Ton.
How much?
2 or 300 million USDT is bridged to Ton now. So let's maybe talk about that. I mean, high level.
The high level thesis is exactly the same as Base and BSC. So if you think about it, Base has Coinbase, BSC has Binance, and Ton has Telegram. All these three are huge products, consumer-facing products with huge distribution, and they're going to bring the users to the chain from the consumer-facing front end to the chain. And we actually saw this a year ago with Base, when Base was not consensus at all. And we said on this podcast that Base was going to be really, really big, and that's exactly what happened. And so I think the same thing is going to happen for Ton. But the problem is, people, at least in the US and Western Europe, they're not talking about Ton, because Ton's home base is Eastern Europe, or the countries that were part of the former Soviet Union. And I started talking to some of the founders that are building on Ton. There's a lot of Asian founders, really good Asian founders that are building on Ton as well. So that's what I'm seeing. Try the products. They're still very early. The products I tried are very janky. That's opportunity for startups. What do you see? So
what I'm seeing is they're becoming more crypto native. They're becoming more crypto native. So an example of this is the stickers are becoming tokenized. I don't know how big of a deal people think this is, but I personally think it's such a big deal. Because essentially they're NFTs, right? And being able to share and send NFT stickers is what makes crypto. Like, I think the biggest problem with crypto is the fact that it's very expensive for NFTs. They don't have distribution power, and they're just stuck in your wallet, right? So like, you change it as your PFP and that's it. And so let's put that to the side. L, right? The Anon on Twitter. He said something which I 100% agree with, is that stickers are the new white papers.
What does that mean?
They're the new white papers for meme coins. So let's play some fun things here, right? If you want to buy Bowden, you buy Bowden, right? You buy the Bowden token and you tell your friends about it because that's what you want to do, right? Like you're like, oh yeah, I bought Bowden. I think it's hilarious. Buy it. But what if you get a pack of stickers of Bowden and they're all NFTs
Mm-hmm.
and you just share it with your friends, right? Like
Mm-hmm.
you're extending the meme because stickers are so cheap and free to use, right? And because Telegram has distribution, right? You could create frictionless ways of sharing memes to your friends and family.
But why is that better than just sending the stickers that don't have an NFT?
Whether there's NFTs or not, it doesn't matter. I'm just talking about stickers generally.
Yeah.
I think that could be a very powerful behavior. Now, being NFTs, I think there's things that you could do that you cannot do with stickers, right? Such as maybe you could introduce claimable tokens to airdrop. So let's say you share stickers and you're like, hey, I'm sending you a sticker and you may receive an airdrop for a token. The way I think about it is that you could increase the unique users of a token by sending this more freely to others. Like there's ways where you could really extend the unique user base. You could extend the meme to other friends and family. And that should, in theory, create more buying power for memes that become more connected to the kind of the sticker user base. Do you buy that or no?
Not really.
Okay.
I would have to see it. I would have to see it work and go viral in order to believe it.
On other news, did you see Polymarket intern Hugo Martingale, his tweets?
What did he say?
I got to pull it up, but it's too funny. Okay, so Polymarket, the Twitter handle, and Phantom, the Twitter handle, were egging each other on to say the word Retardio. And so Phantom said RETARDI. So they went through like a series of tweets where it spelled out.
Which Phantom? The
Phantom,
wallet
the
or
wallet.
the chain? Okay.
The wallet. And then right after that, the Polymarket intern said that he was called into the HR's office. Her name was like Susan something. This is great. And apparently he got disciplined and he can't say the word Retardio. And then they put out a one-page PR release that talked about how the word of Retardio is bad and it's against the Polymarket's ethos. But in that letter, they said the word like Retardio like 4 times. And then that he had to, and so he went and he got disciplined, and they apparently took his access away from Polymarket, the handle, whatever. But I thought it was just really funny because Polymarket in and itself is it's not a degen product.
It's very serious.
It's a very serious product.
Prediction market.
But the stories and how it's getting deeper into the degen community and surfacing up ways to use the product to use, like, what's really interesting is that now it's for like getting degens to use a product by speculating things that are more degen, right?
Yeah.
Like an example of this is like with the boxing event with Ansem that happened recently with Barney, the boy. They brought that as a market on Polymarket. And to me, the strategy is like, like you and I have been bearish prediction markets, right? Like in the sense of crypto, I think it will be a thing, but I think the opportunity may be taken by meme coins and coins in terms of attention.
Yep.
There'll always be a place for prediction markets, but because it's capped, I think the excitement around the average user using that may be limited compared to meme coins.
So I was actually talking to an executive who come from a Web2 sports betting website, a very famous one, very popular one. And he told me that the market share or the sports betting, Web2 sports betting websites are losing market share to meme coins.
That's a pretty big deal.
That was a huge aha moment for me.
Yeah, that's a pretty big deal.
Because it all makes sense.
Yeah.
Like the people who go do sports betting on those Web2 sports betting websites are the same people that trade meme coins. Yeah. And actually, Ansem tweeted about this in December last year. I didn't pay attention it didn't click with me when he first tweeted about it, but now it all makes sense.
Huh.
Because ultimately, like what sports betting is about ultimately is first and foremost making some money, and second, the entertainment. And that's exactly what meme coins are. And I do think meme coins are a strictly better product.
So much
because the upside is unlimited, and
So
unknown.
much.
It's unknown and unlimited.
Even if you think about like betting, there's financial losses, right? Like I'm not saying that you don't lose money on meme coins, but you could, in theory, limit the risk of how much you lose, like in theory. Whereas with pure financial betting, you lose it's like an option, right?
Well, I mean, the downside is 100% in both cases. I mean, meme
Well,
coin
if
just
the token
goes
goes to zero, right? Like
Yeah.
at least you have optionality. Like there's a spectrum, right? In betting, I've never bet, so I don't know. So I've never made a bet in my life. But from what I've seen, it's either zero or hero.
Mhm.
In meme coins, you could say it's hero, but you could say that there's a spectrum before you go to zero.
Yeah, fair enough. But let's face it, most people are going for the hero zero.
Yeah.
100x or zero.
100x zero. Yeah, 100%. Like if you're going to hold this thing to whatever, 100% agree. But you could say that it's a safer, to a certain degree, it's a safer bet than doing a pure binary trade.
Yeah.
Is the way I see it.
Oh, by the way, Kyle Samani also tweeted about meme coins yesterday. I thought it was interesting.
Yeah. What
He
did he
said,
say?
Isn't meme coins the best way to monetize open source projects?
He's getting it.
Do you agree with that?
I do. I think you could use just coin tokens as a way to monetize anything and increase the behavior of anything if it's done the right way.
Like if you really think about it, it's obvious in hindsight because the crypto infra projects are essentially open source projects that are being monetized with a meme coin. Like they don't create any value to the coin, at least with the exception of maybe Ethereum, which does have some real yield. The vast majority of the infra projects are open source and are not accruing any value to the coin itself. So to me, they're meme coins, and they're priced based on the level of attention.
And isn't there projects that are scraping GitHub repositories and using it for their own advances from a product perspective?
Sure.
So could this, in theory, solve that problem where you could scrape data, but then you get airdrop tokens? Thanks for contributing to this network. We're going to use your data, and every time we use your data, you get tokens.
Sure. Or every time you contribute to or you do a pull request, you get a you get a token.
So I 100% agree. I think there's something. There could be something here with that.
Anyway, it's interesting. I can see that happen.
So I think the era that we're going into, is the hyper tokenization era. I think.
Yeah.
And I think people are starting to get it.
The hyper universal intersubjective tokenization.
Should we talk about Eigen?
Let's talk about EigenLayer because there is a lot of FUD.
There was a lot of FUD. Look, there's a mismatch of technical talent and their users, right? Obviously, the EigenLayer team is incredibly talented, very technical, research heavy. And, you could see that through the DNA of the products that they're building, right? I mean, even if you look at the tagline, intersubjective tokens, or a 42 white paper just about the token, right? And then you have farmers that are very profit oriented that have maybe 100 different tokens that they're farming at the same time. So the attention that they give to any one project is probably nil or zero. And when you come out and say, hey, by the way, guys, here's a 42 page white paper. I expect you to read this to figure out when you're getting your token.
Mm-hmm.
I mean, their only thing that they think about is one token and how much of it I'm getting.
Mm-hmm.
Then you come out and say, oh, by the way, here's a catch. We're going to hold your token. Well, why'd you even give it to us in the first place? Why'd you even tell us about it in the first place? You should have been upfront with us about it.
Yeah.
And so there's this invisible social contract between protocols and farmers. They're both playing the dance. No one knows what the outcome's going to be, but the expectation is that it's going to the moon.
Yeah.
Right? And the protocol wants that to happen, but they also know that most farmers are mercenaries and profit oriented, and that they're just going to dump the token.
Mm-hmm.
And that's kind of the game that happens, right? That's what it is. And so every now and then you get a protocol that'll say, no, you know what? We're going to do this. I think Paradex? Was it Paradex? are what's the
Paraswap.
Paradise, right?
Paraswap.
Paraswap, sorry, Paraswap. Paraswap, who's also an Alliance alum, did something kind of interesting, which kind of like upset the community.
Yep.
Starknet did this recently, that upset the community, and now it's EigenLayer. So
Yep.
yeah, what are your thoughts on it?
From a pure capitalist point of view, sure, the farmers have the right to be angry, but they should also know that they knew from the beginning that whether or not they will get the airdrop and how much they will get was uncertain. They don't really have anyone else to blame.
Yeah.
By the way, I'm not saying this I'm not defending or criticizing either side, but that's just the reality of things. It's the free market. If you want to farm something that has no uncertainty, that has no certainty on the value and the amount, then yeah, you bear the consequences. At the same time, I think what airdrop farmers don't know is that sometimes even the team doesn't know from the beginning how the airdrop will be conducted. Because as you design the airdrop in the token, as the dev, you start to realize that the whole legal and regulatory landscape is a huge black hole. You learn new things every week. You learn new laws every week, new rules every week. And your legal counsel gives you new recommendations every week. Mm-hmm. So it's a constant moving target. And so it's true that EigenLayer could have been more upfront about the geofencing and the non-transferability of the tokens. It's also entirely possible that when they first launched the program, they had no idea that they had to geofence all these countries and had to do non-transferability. By the way, for those who don't know, I think the most likely reason why they implemented the non-transferability of the tokens is actually legal. It's not the stuff that they put out on their website. Like what they put out on the website is they wanted, they want decentralization and blah, blah, blah. That's not the real reason. The real reason is legal. And I know this because some of the startups that we work with get legal advice like this from their counsel to lock the token for a year. So it's a legal thing. And it's entirely possible that the EigenLayer team didn't know about this when they first launched the program. So yeah, EigenLayer team could have done better. But ultimately, I think the right target to redirect our anger, or for the airdrop farmers that redirect their anger towards, is the regulatory regime and the three-letter agencies.
I agree, but with the caveat that you should be more upfront with farmers. Getting $15 billion in TVL, right? It's a lot, right? And so, I think farmers have many opportunities ahead, right? So there's an opportunity cost for farmers. And so I do think that, protocols need to be a tad bit more upfront about the way they're thinking about it. That's all.
The airdrop aside, the thing that I really struggle with is, are the AVSs real? How many AVSs will actually use EigenLayer, and how much yield are they going to give to the EigenLayer stakers?
Can you talk about AVSs for our audience? What does it mean? And
yeah, so AVSs basically are, it could be new protocols, new dApps that need security to secure their protocol, but they don't have their own token yet. So where would that security come from? It could come from the ETH restakers that use EigenLayer. So you can basically think of EigenLayers as a two-sided marketplace. On the one side is those AVSs that need security, and then on the other side is the ETH restakers that provide ETH to secure those AVSs.
So why would AVSs need to launch their own tokens if they're using Ethereum as a way to secure their network?
Well, everyone has an incentive to launch their tokens.
Of course.
So what I found is by talking to some of the AVSs or potential AVSs is that at the beginning of their startup journey, they are considering using EigenLayer because launching a token is very, very difficult.
Oh, so like a bootstrapping mechanism.
Yes. So EigenLayer is basically a bootstrapping mechanism for new protocols. But in the long run, every protocol has the incentive to launch their own token.
I think that's a fair proposition, in my opinion.
Yeah.
Why worry? It's almost like, what Cosmos was trying to push with validator as a service model, right? Which I think was the right approach, but obviously, and then the return the validators would have is that they would just get tokens of that new network.
But what I struggle with is how many protocols actually need security right off the bat. Because if you think about the layer 2s, right? Like people say, oh, layer 2s could become AVSs, and then a bunch of middle layer protocols can become AVSs, can use EigenLayer. But if you think about the layer 2s, they're centralized. Like the way they secure their protocol at the beginning is to be centralized.
Centralized, yeah.
They don't really, their token has no reason to exist yet. They don't need AVSs. They don't need EigenLayer.
But okay, so let's say that, well, yeah, what if layer 2s want to decentralize?
But now they have their token. They can use their token
to
secure their protocol. So I'm sure there will be use cases. There will be good candidates for EigenLayer, but I just struggle with the number of that.
Yeah.
So we'll see how it plays out. I think EigenLayer has a good reason to exist, but how big really the market is, we'll have to see.
And then you also have Berachain, which is a competitor to EigenLayer. Some people have said that the recent speed of movement from EigenLayer has been because Berachain and others are starting to compete with them. So I'm unsure of that notion or thesis, but just calling it out for our audience. But overall, I think Sriram and team are incredibly strong. I think they will do well. They just have to kind of... I mean, this happened with Tensor. Like, people FUDed Tensor when the token dropped.
Every airdrop gets
Every
flooded.
airdrop, there's always a mismatch of expectations. Most people forget. They demand one side with their signs and pitchforks about why they need to get more tokens and yada yada yada.
Yeah.
But I do think there is a way. I think public comms is important. If your protocol launch your token, try to be more upfront, because as front load information and then drop the token versus dropping a token and then trying to fix it afterwards is the only suggestion I would have for protocols.
I agree. You want to treat your users well, but at the same time, a lot of the FUD is a little bit misplaced as well. So honestly, I would take the what's that guy? What's the health guru's name again? The guy who dated 6 women at the same time.
Huberman.
Yeah. I would take the Andrew Huberman approach, which is just not deal with it. Yeah. Like, he just posted through the whole week. Like, the week where there was so much FUD, he did not address it at all, neither on his podcast or on Twitter. He just posted through. Like, he just kept on posting and talking and doing the podcast as he normally would. And the week later, everyone forgot. So I think the same thing, with airdrops. I think the airdrop farmers will forget about this whole thing in a week.
Someone famously said that most users have like short-term memory. So like, as long as...
Especially the airdrop farmers, they're by definition missionary.
Yeah. Speaking of airdrops, Fantasy launched Mainnet today, and I'm really excited about this team. They were part of our most recent batch. Maybe talk about how your experience finding connecting with the Fantasy team, and we could talk a bit about.
Yeah, when they first launched the product, they just tagged me, like, because they have a bunch of cards, right? And every card represented quote unquote influencer, and I'm somehow one of the influencers. so they would.
No. You're not an influencer. You're a KOL.
I'm a KOL, key opinion leader. My opinions are key
to leading the future of DeFi.
Exactly. But anyway, so they dogfooded their own product, and so they play the game. They collect the cards, and they collected me, and they tagged me on Twitter saying they collected my card, the card of me. So that's how I found out about them and started chatting with them. And I really liked the team. And then we flew them to New York to work with us for 2 weeks, and they're just the most hardworking team of the cohort.
These guys are insane. 3 a.m. they would leave the office. I mean, I would leave at 9 p.m.
Every day.
It's insanity. But I would say that because they stayed so late and worked so hard, they inspired a lot of our other founders to work just as hard. Yeah. So they have this energy, even on Twitter, just the energy. It makes me want to open up a pack every time.
I love their when you create a referral code and tweet about it, and they have a new message every time.
Yeah.
And the latest is Fantasy is the most egalitarian, blah, blah, blah. You know that thing, right? The most egalitarian. Yeah. If it works, will really change the fabric of society. I like it. Like, they're so good at this stuff. They're so good at making and be funny and making things go viral. And it's very natural. It's not cringe. It's very natural.
Very natural. All right. So I put this tweet out the other day that said, consumer crypto founders will have to master the art of incentives along with the art of attention. And those that do it really well can really onboard like a large group of like users, like or core users.
Yep.
And I put right after that tweet, I put in, those that follow the existing playbook will not make it, because every art or every launch has to be so unique, so special that people will like get rid of all the farming opportunities out of the way, because there's 1,000, and they'll give 30% of their attention to this one protocol or this one special project. And that's very hard to do. That's very hard to do, but these guys have managed to do it. And I think moving forward, consumer crypto founders not only have to compete for attention, but they also have to compete for opportunity cost, right?
Yep.
For airdrop farmers and just users generally.
So my current mental model for selecting founders, I have a very simple mental model.
Okay.
And there's obviously a lot of exceptions to this, but I love Ivy League kids who build infra, and I love degens who build apps. That's it. And I think if you're not a degen, you cannot build great apps. Like every team that I've seen that build really good apps in crypto are degens themselves. By being degens, they understand the users.
100%. I mean, it just goes back to this, right? You got to dog food crypto. If you can't dog food crypto for 2 years, then you won't understand the problems that crypto founders or users go through. I mean, like you and I have talked to many founders that apply to our program, and like the basic concepts of certain things that may seem so like this, the problems of onboarding into wallets and bridging and all of that, like we can tell whether founders actually have gone through this. It's very easy for us to tell.
Yeah.
And so for founders that are looking to apply to our program, we're very heavy deep into crypto and we're degenning everything. We're doing all of what users are doing today, and we can tell pretty quickly. All right, I'm going to share my screen here. All right, live pack opening, guys, with Top Fantasy. What do you think I'm going to get?
You're going to get me. I think you're going to get me. If you get me, simulation confirmed.
Simulation confirmed. Okay, let's see. All right, let's see what we get. Oh, I have more packs to open. All right, let's do this.
Music. Like, who is it? Sex offender.
Sex offender. War Daddy Capital. Mikado.
Or what's the founder?
Rip It Fan.
The other founder? Eric Wall. Nice.
Eric Wall. Mark Chain Shaw.
Zeneca.
Contest. Nate Alex.
Lawrence.
What a beautiful experience. Oh, look, there you are. All right. That was a fun experience. Like the music, the lights. Well, thanks for catching Good Game. We'll see you guys soon. As always, the views expressed in the Good Game podcast are personal to the speakers and do not necessarily reflect the views of any other person or entity. Nothing here should be construed or relied upon as investment, legal, tax, or other advice. Thanks for listening to Good Game. Don't forget to subscribe. We'll see you next week.